Hello, folks. So, welcome to Pablo and Bryan's Spaces.
Which beach are you coming to us from today, Pablo? I noticed it's a different one on all your videos. You're a world traveler.
This is the one that BitBoy Crypto is staying at. So we're both stalking Sam Bankman-Fried. So we can't leave unless BitBoy tells you what it is. I cannot tell you actually what it is that where I'm staying, because it could be problematic. Yeah.
He's got a hearing coming up. It looks like, doesn't he?
So
SBF.
yes. So I'm not a expert in American law, so I want to ask you this: does that mean he has to physically be inside the Capitol building for this to happen?
Yeah, definitely. When you get a summons or subpoenaed, you have to physically appear. It's very rare that they would let you not physically appear. My cousin's actually an attorney in Washington, D.C., so I have some insight into that. But yeah, I mean, I would think he would have to be there.
Right, I see. So
The media tour of everybody, kind of brown-nosing, kissing his butt, and we don't need to go into the whole donations thing. But,
yeah.
I mean, it's really the rubber's going to meet the road here to see if there's legal action, because the media can't save him from, I mean, can they? I don't know. Can they save him from legal action?
Well, Brian, so do we agree that the media has been trying to save him? Do we agree?
I mean, it really has to be, because the way that he talks about how he had no idea what was going on, it just doesn't add up. You know what I mean? It just doesn't make sense. And no, if you also notice, nobody's asking him really the hard questions either, I don't think.
Yeah, look, yesterday, what's interesting is that yesterday, I've never seen CZ do this, because he's a very busy man. But yesterday, CZ, who's the owner of Binance, just gave like a 11 segment tweet. Like, how you have threads? You know how you have 11 tweets in a row? That's what you call a thread. He did that, and he basically said, look, I'm not... this is what's happening with SBF. This is what happened with us. He's going to attack me because he's going to accuse me of being a Chinese company. He's still paying Kevin O'Leary, and Kevin O'Leary is going to keep on going and attacking me, saying I'm a Chinese company, even though Binance is based in Canada. All this. I've never seen CZ do 11 tweets in a thread, because he's a busy man. He's always usually like, if you've seen CZ tweets, most of the time it's one or two words. Like, he would say, keep building. Like, rather than building, he said building. Like, building, or one word, or keep hodling, or something like that, don't believe the FUD, something like that. And he retweets something. I've never seen him do this. So it looks like he's pissed, and looks like he's going to be going into the, he's been asked to testify as well, because the article I read says the Senate, the House for Financial Services Committee is asking both FTX and Binance CEO to come in and shed light on the massive collapse that has put over 1 million people into financial jeopardy. So both of them going to be called in, and they could. CZ's worried that they could actually turn the tables on him, even though he's kind of the good guy in this situation. They might actually turn the tables on him. Anyways.
Yeah, I mean, the best defense is a good offense, right? For CZ to sort of set the stage and say what he needs to say before they start asking questions. But it's a crazy time for the exchanges, because when the next bull run happens, there's going to be all this market share that's going to get sucked up by somebody. I mean, there's a hole in the market. There's the small fish are going to be eaten by the big fish.
I see. Yeah, it's a little bit funny that it's that fish that gets got taken down first. So, how's the bear market looking for you in general? I thought this would be a nice one to talk to you about, Brian, because, like, you're the one guy who basically has gone through bear and bull markets. It's starting to show our age. We're the two guys who are the boomers of this crypto movement, and I think it's really, really important to see the whole picture right now, rather than be like crypto bro and be like, yeah, that's by the dip, and it's all gonna bounce back again sometime pretty soon, new all-time high, which could happen. But I would say certainly a smaller probability than the 2017 bear cycle and the 2015 bear cycle, and I just see the situation as being very different. How do you see the situation now, Brian?
Well, I mean, we have to look at the fact that it's the most anticipated recession ever. So everybody's expecting this horrible recession, and usually the market doesn't do what everybody expects. But if you want to bring my boomer experience into it, everybody's first bear market and recession, they can't really control their emotions. That's what I have discovered. I remember in around 2010, my mother-in-law, I was just, a 20-year-old spring chicken, and my mother-in-law said, you should really be buying some of these stocks right now.
Yeah.
And some real estate and properties. And I said, are you stupid? It's the end of the world. Dude, there's nobody buying right now. We might not survive this. And she looked at me and said, well, I've been through this before. So, I mean, having been through it before, I don't paint the same kind of doom and gloom that maybe some of these guys in our comment sections do, right? Like, crypto's dead, man, move on. But it is different this time because of the Fed in raising interest rates. But, I mean, the thing about it is there's a lot of black swan events right now that are not crypto's fault. I mean, SBF is a perfect example. He's one guy, and he's not that smart of a guy, obviously, or he's really smart. He's tricking everybody. I don't know, but it's a centralized one guy thing. It's just like saying that because of Bernie Madoff's Ponzi scheme, nobody should ever invest in stocks anymore. Nobody should ever invest in private equity anymore because Bernie Madoff was a scammer. Wait, what? That doesn't make any sense. So it's really, I think, sort of an interesting black swan event where it's really not like, I'll tell you guys what would be a horrible black swan event, right? If somebody hacked the Bitcoin blockchain and the quantum computing or whatever, and it was like, Bitcoin's not secure anymore. All of the cryptographic encryptions don't work anymore. Now, that's a real black swan event for crypto. But, I mean, this Sam Bankman-Fried centralized exchange is failing. That's just nothing new. That's not, you have Bitfinex and Mt. Gox. And so when you look at the crypto microsphere, it's not that big of a deal in my eyes. Maybe even a good buying opportunity. The problem, of course, is the macro narrative. That's the bigger issue.
Yeah, okay. So basically, I like to address that in two ways. One, so I've got a friend who's a Wall Street hedge fund manager who actually managed like $4.5 billion, co-managed, and he's in my Discord, and we talk all the time. And people from my Discord, who are listening to this or who are watching this probably knows. So his name's Rayon, and he says to me, in his estimation, he says, what's coming is going to be something worse than 2008. But not as bad as 1929. And I never thought I should put a number on it, saying compared to this recession or that depression. But I keep on thinking about what he means by that, and I keep on looking into the evidence and the data, and I keep on thinking to myself, okay, so let's say conservatively speaking, if Rayon is right, he's nobody's 100% perfect, but he's been ahead of the curve. He's one of those guys who genuinely knows what he's doing, and I have discussions with him not because he doesn't know what he's doing. So let's say even if 2008 happens, we know that all the Fed has to do is just turn on the printer, and then the economy will go back to normal again. Well, not normal again, but the stocks are going up, Bitcoin will go up again. That's what happened in 2008, 2009. We know that can happen. So for your to help your argument, Brian, and I've got an against as well, but to help your argument, basically, the last time that the Fed spoke, they asked what's his name? They asked Jerome Powell, are you worried about over tightening and tightening this economy into a recession? And he essentially says something like, we are more worried about inflation right now. He says, if we go into if the economy weakens too much, I'm paraphrasing, but his almost exact words were, we know we can support it and bring it back. That's not our worry. So, look, if you just look at the last 12 years, the 2020 crash, COVID crash, was just as bad as 2008, because if they kept on going with that thing, I know it turned out COVID wasn't as severe as they feared, But let's say if it was a really deadly virus, and if everyone had to be shut down indoors for, like, say, for real, for like 9 months, if COVID was more serious, it didn't just finish after 6 weeks and the economy reopened. If that was the case, then the Federal Reserve could just kind of print their way out of it, as they've demonstrated. Because 2008, 2009 was like a kind of a world-ending major catastrophe as well. 2020 was a major one as well. They could just print their way out of it. So if Rayon is right, if something worse than 2008, 2009, but better than 1929, which is a Great Depression, happens, something of that magnitude happens, the Fed can print their way out of it. And I believe so as well. It's when you turn on the printer, you can save almost anything in the short term. I emphasize that's in the short term. In the long term, we are seeing the effects now of turning on the printer too much since 2009. Some might argue against that, but I think it's doable. However, my argument against what Brian is saying is this: one is, have we reached the bottom yet for a bear market? If we're comparing to 2008, 2009, if we're comparing to 2020, the COVID crash, stocks were a lot lower, and Bitcoin percentage-wise were a lot lower, and even altcoins percentage-wise were a lot lower by the time they hit bottom. So there's one thing to consider there. Yes, I do believe they will bounce back, but however, are we there yet? Second question is this. I do think if the Fed turns on the printer, they can solve anything. And in 2008, 2009, they did. In 2020, with the COVID crash, they did solve that problem. However, here's my problem. This time, they can turn it on. But can they turn it on at full blast? Because inflation may still not be down. Okay, put it this way. Last two times, 2009 and 2020 COVID crash, interest rates went to zero. And QE went to like $1 trillion a year, or $1.5 trillion a year, something like that, or more. This time, can they, say in 2023, if we have the recession or a small depression, can the Fed afford to take rates right back to zero again, or even go negative, as in the case of Japan and Europe? Can they QE once again at $2 trillion a year, quantitative easing, $3 trillion a year, whatever the number was? I think it is possible that this time they might do just enough to save the economy from complete collapse, rather than juice everything up to a new all-time high. That's possible. Where if it does reach a new all-time high, it could be like a very small bull run, very short bull run, rather than the one we saw in 2020, rather than 2021, rather than the one we saw in 2009. Those are my thoughts.
Yeah, I mean, the problem here is that inflation, you cannot hide from inflation. I like to explain inflation like, let's say you are in a bad mood and you keep eating to make yourself feel better, and you can eat cookies and candy and bread and whatever, and it works. It makes you feel better, right? Emotional eating. But once you weigh 700 pounds, you can't do it anymore. You have to find a different solution. You have to face the music that you are going to die of being obese. And that's kind of what inflation is. A country cannot hide from it. They can't, make it go away in some other way. So it's kind of like we have to have the pain now. And this is very different, as you said, Pablo, than past recessions, where I actually worked in the real estate industry in 2008, and I saw all the foreclosures up close and personal. And there was a lot of things that the government could do to help you out. They could do mortgage forbearance. There was just bailouts. AIG, the big insurance company that was insured all the banks, they bailed them out. But you can't hide from inflation. So it is a much more dangerous situation. There's not an easy way out. And buying distressed properties and renovating them and putting tenants in, and you can still make money. I always like to say it pays you while you wait. And it's like, that's the way crypto is right now. There's opportunities. They're just micro narratives. They're not the macro scene. So I think that if people still want to participate in crypto right now, you should hodl your Bitcoin. You should DCA into Bitcoin and Ethereum. With money you can afford to lose. Now is no time to be selling the farm to buy crypto. But the main thing is the micro narratives. I think are going to be a lot better for the next couple of years. And it's not just going to be everything up only. And this also goes for people's personal lives too, in business and real estate or whatever else. There's always a way to make money and get yourself up to the financial freedom you want to get. It's just not going to be buy any random shitcoin and wait and then feel like a genius, you know?
Yeah, I agree with that. So basically, the approach going forward for the next, for the next 10, 20, sorry, for the next, say, 5 years or so, could be a very different environment than the one we saw before. So there's always going to be a bull market somewhere. The trick is spotting it. And first of all, what I'll say about crypto is this. Basically, I 100% agree with Brian that the blow up with FTX is not a crypto problem. It's a regulation problem, and it's a human failure problem. That's like saying if crypto is essentially an unregulated industry. It's kind of like saying, if I invest in pot right now, before regulations came in, and it was kind of all your pot suppliers essentially could only produce in the Bahamas or in Cayman Islands, and you couldn't produce in the United States. If that was the case, then do you think sometimes there might be bankruptcies and these pot growers might sometimes run away with the money? Well, of course, because it's not regulated within the United States or within Europe. So if you call FTX a Ponzi, which I don't think it started off as a Ponzi. I think he was trying to do the right thing, and then once he had a $1 billion hole in there, he just wanted to try to make it back and make it look like it never happened. And then when the market went down and he couldn't make it back, then essentially what happens is you lose more and more, and then it becomes a Ponzi. Then all you can do is basically just invite more money to join and hoping people never notice that there's a couple of $1 billion of holes in there. And I think a lot of crypto companies are in that situation right now. I mean, Genesis and Grayscale are admitting they're in that situation right now. However, that's and they're looking for $2 billion. However, that isn't actually a crypto problem. That could happen to any company. It could happen to Bernie Madoff, who was like a Wall Street, hedge fund. It could happen to Enron. It could happen to it happened to Lehman Brothers. It's basically human greed and lack of regulation, or basically regulations not working properly, and retail investors and large institutional investors got burned. So basically, I think what it's in a way, I'm really glad people are saying that crypto is dead. I always encourage people, like if I didn't have to be responsible, if I didn't have so many followers, I would be out there. If I was anonymous right now, I'd be out there right now saying, putting up arguments of why crypto is dead. I would be saying, yeah, crypto's dead. Crypto is dead. Housing's dead. Housing's going to go to zero. Crypto's going to go to zero. Bitcoin's going to go to zero. I would scare the fuck out of everybody, right? And hope just they hand over the chips, right? Like, give me Ethereum at $80. Give me Bitcoin at $1,000. Like, I would laugh so hard by just, pumping this kind of FUD out there and crash it all. Now, because right now I'm in a public position where there are a lot of people following me, and so I always say it's not financial advice, but I don't want to be saying clearly false things to people because they are trying to, get a better understanding of what's happening in the markets. So the responsible thing I could say, and what I'm doing is basically, as I've said 1,000 times, I think this is the .com crash of crypto, which means there are going to be amazing opportunities once it gets to a certain level. Do I think we're at that level yet? Probably not, because if you look at the .com crash of 2000, basically, a lot of major companies went down, and then it took years for them to come back. A lot of them disappeared, but however, 2.5 years after the crash started, after the peak, if you bought into Amazon, even like $2,000 or $3,000, you could have just retired off that, and that was a stock. That's not even a .com. That's not even crypto we're talking about. Crypto, can do much more explosive gains, as we all know. So the question is more about finding the crypto that's going to survive, or keeping an eye out for what new narratives are going to be doing well in the coming few months, when everybody look, just between you, for all the guys who are listening here, for everybody who's listening here, and for all the folks who are following me in Discord or following Brian, I would say let me whisper this between just us, right? And if I was a bad guy, I would say, don't tell anybody else. Let them all sell their cryptos to as low as possible. Let them all sell their houses. I have people in my Discord know this. People who've been following me know this. I've been saying for so long, that's save up cash. The buying opportunity of a lifetime is coming. The buying opportunity of a lifetime is coming. I even told people in my Discord to go and get a second job. I said, maybe the time to go all in is not now, but get a second job in 6 to 18 months. It can probably change your life. The only question is, is the bottom in now, or do we dollar cost averaging now? Or do we on the riskier coins or on the new narratives that's going to run for the next bull market? Do we save up, and do we wait a little bit longer? That's the only three questions to me. And also, I would say broaden your horizon, especially if you're a family man. Don't go all in on crypto, because as we know, it's quite risky. You could never tell. But certainly I would have it as part of my portfolio. There's probably going to be some amazing adoptions coming along the way. But broadening your horizon to think about other assets as well. That's always sensible. Sorry, back to you, Brian.
Yeah, it's an interesting bear market bottom because people are so confused. They trusted these centralized platforms like they were banks. They thought, oh, I deposit my crypto on this platform, it should be good. And that's the way it should be. These centralized platforms should be regulated like banks, because this is not supposed to be a risk, right? You're supposed to take the risk when you buy Avalanche or Solana or whatever on the platform, and then it goes down. Okay, fine, that's a risk. But we've been trained in our society, modern society, there's insurance, it's safe, we have FDIC insurance. People grew up knowing that there's not these big risks, and here they lost their money in these big centralized platforms. So much so that when legitimate platforms come along, like Fidelity just announced that they opened up their crypto trading platform, and I just got a Fidelity crypto account. People are like, oh yeah, not your keys, not your coin, they're going to lose it, they're going to gamble your money away. They don't even realize that Fidelity is one of the biggest banks in the world with $10 trillion of assets under management, 100 times bigger than Robinhood. People are so turned around backwards right now that I do think those are some of the bear market bottom signals that, and of course with the macro environment, the bottom might not be tomorrow, as you say, Pablo, could get worse. But I mean, it is so ugly. The blood in the streets is so thick right now. I've rarely seen anything like this. And sure enough, with the .com thing, you're exactly right. One of the interesting things about the Fidelity launching their crypto trading platform is, first of all, Fidelity is massive and extremely safe. I'm not sponsored by Fidelity. I've just used them for a long time. And guess what? They're only offering 2 cryptos to start with, Bitcoin and Ethereum. So you have a transition from tons of tiny exchanges offering tons of coins without any regulation to a massive centralized bank offering only the 2 big coins. A safe, massive centralized bank offering only the 2 big coins. Now, could there be other Fidelity listings coming up? Of course, they're probably going to add, and that's going to pump the heck out of new coins that go on Fidelity. But you're seeing a transition to a more sustainable crypto future. And I hope some of you followers, if you guys are younger who are listening to this, realize that what happened here was not necessarily a failure of crypto. It was a failure to regulate. We need regulation on these centralized platforms. They should not be risky. And this is a problem that was solved in the Wild West, hundreds of years ago. If you hid all of your gold under your bed and under your mattress, in Tombstone in the Wild West, and some bandit came and took it and then, killed the sheriff, you lost your gold. That's what we're dealing with right now. It's still the Wild West. It's very much a .com style purging of the early Wild West phases.
Yeah, the absolutely right. So basically, here's the thing, Brian. What I realize is very few people are going to listen to me like really listen anyway. Like my videos get out there, and sometimes millions or hundreds of thousands of people see it. And the majority always argues with you. When there was a bull market and I said, it's going down, I don't know the exact timing. Okay, I got the exact timing wrong. I said it's going down to 20K. Oh, it took a while to get down there. But it went down there. Now I said 12 to 15K, and now we're there. We're at 15K and bounced. So it's it's difficult to get the exact timing right, but the general direction I'm more confident about. You can see the reasoning, clear reasoning behind that. And when it was a bull market, and when I said it's going down, 90% of people wanted to argue with me, right? And then those 90% of the people are back working at McDonald's. And now in the bear market, I'm basically saying, okay, ignore the FUD and ignore the what they're saying about FTX, because that's actually not a crypto problem. The way where does it say on FTX website or prospectus that they're a decentralized, exchange? They're not. They're a totally centralized exchange. We all knew he had owned something called Alameda, and that was a hedge fund, and that's usually suspicious as fuck. If you, it's kind of like saying, the guy who owns the Nasdaq exchange also owns a large hedge fund, and they trade together. So this happens because of lack of regulation. And this is probably a good thing because, one, it pushes people more into Bitcoin thinking, and self-custody thinking, maybe it's safer that way. And if you want to play the altcoins and get into the innovations in crypto, then basically demand to see where the decentralization is, and know that if it's not decentralized, if it's centralized, then human nature will ultimately corrupt and break all systems. That's the whole point of getting into blockchain systems in the first place. So it's the thing you spoke about, Fidelity. I'm watching that as well. I'm also watching JP Morgan. JP Morgan said they want to buy up some assets from what's it called, from FTX after they collapse. I think that's how, what I said before in the last 20 minutes, that's how all whales are thinking. That's essentially how all whales are thinking. Like, oh damn, we overlooked this crypto thing and it went up like 200-300x, and it's too high for us to buy. So that's, pay the guys who work for us in the media, fud the hell out of it, say crypto is dead, crash it to zero, and then BlackRock, JP Morgan, and Fidelity then start their own, hedge funds, trading accounts, ETFs, whatever it is. I'm not a conspiracy theorist. I'm not, going to sit here and tell you guys, oh man, it's the World Economic Forum, man. It's WEF. This WEF's going to take all your money. They're just trying to scare you to sell Bitcoin to the whales. That's how Bitcoin maxis sound. I just tell you, guys, what I do. I basically, if I was anonymous, and I would basically tell people to sell everything they own right now. Their houses, their Bitcoin, their stocks. Because I've been saving up for quite a while. I saw this coming. I told you guys this coming. I've saved a lot of cash. I'll go all in when I think the bottom is kind of near. I don't have to pick the exact bottom. I could basically wait for it to bounce 20% to know that the Federal Reserve has started printing or intends to print, and the market is safer. And I didn't catch the bottom, but the market is safer to get in. And then I go all in on a number of these things. So it's basically in the short term. Not in the long term, but in the short term, it's a zero-sum game. Zero-sum game. If someone sells you Bitcoin at, say, 15,000, goes to 30,000, he's lost that $15,000 of profit. You've gained that $15,000 of profit. In the short term, it's a zero-sum game. So basically, it's, if I was an influencer, if I didn't have people who want to listen to me, 100,000 people who want to listen to me, I wouldn't be sitting here saying, hey guys, just wait a little bit more, be patient, stack some cash, and buy an opportunity of a lifetime is coming. I would be saying, sell it all, man, it's all going to zero. Are you sure? So yeah, it's if JP Morgan's doing that, if Fidelity's doing that, that's completely what they should be doing. One more thing I want to say about Fidelity is this. This whole thing about not your keys, not your coin, they're technically correct with Robinhood. If Robinhood goes down, like FTX, nobody's coming to the rescue, right? In fact, the Federal Reserve is going to be laughing, saying, "Haha, you thought you're going to replace the U.S. dollar with that little toy coin token you've got? No, baby, we're going to crash it, and you're going to be using my CBDCs, right?" But however, Fidelity, I think, is the largest, or at least in the top five financial institution in the United States. It is certainly the largest in terms of 401ks, which is, the retirement accounts for Americans if you're not, in the US and you don't know what it is. So if Fidelity was to go down, in my opinion, if say Fidelity went down and they couldn't pay out your Bitcoin or your Ethereums, and you say, oh, not your keys, not your coin, I would say, if that happened, then basically that would be a collapse about 10 times bigger than Lehman Brothers. Because Lehman Brothers actually they're a commercial bank. They actually don't hold, a lot or any 401k accounts. Fidelity holds all these 401k accounts of Americans, right? Again, I'm not sponsored by them, right? But I think it's a good example. I've been watching what they do with crypto as well. If they had to go bankrupt, the first thing the Federal Reserve, the first thing the freaking Treasury of the United States will do, I don't care if it's Democrats or Republicans or Elon Musk, who's the president, the first thing they would do is coming with a bailout package 5 to 10 times the size of Lehman Brothers and basically rescue Fidelity. Because if Fidelity goes down, America goes down, the world goes down. All the Europeans and Australians, the prime ministers and presidents were screaming at the US saying, please bail them out. Do not do this, right? Do not let them go down. Nobody would let that happen. And if Fidelity gets rescued, then they'll basically say, oh, we now have enough money to pay out everybody their Bitcoins and Ethereum. So, I mean, that's a hypothetical situation. That's like a black swan, end of the world hypothetical situation. One, I'm not sponsored by Fidelity. Two, I'm just playing out the logic as it happens. Three, I advocate not your coins, not your keys, not your coin. So don't trust anybody else with it. But sometimes if we have to play a hypothetical situation, I'm like, there's a chance you freaking lose your own keys if you, if you write it down on a piece of paper, the house burns down. If you put it somewhere, like if you stamp it, what CZ does from Binance is he stamps it onto this metal card. He stamps his password onto this metal card and he buries it somewhere in his house. What if your house gets robbed? Because everyone knows you're CZ, right? Fidelity is never going to go bankrupt in the way that we think it might go bankrupt. If it goes anywhere near bankruptcy, the United States government is going to save it. If they did create a Bitcoin ETF, I would actually trust it more than my memory or me keeping my keys somewhere. I totally understand the reason of people not wanting to trust these organizations. Those are the Bitcoin maxis, the libertarians who are saying, it's the government, man. You're going to have to run away from the government one day, man. The government's going to freeze your account, man. That could happen. That totally could happen, as we saw with the Canadian truckers, as we saw with, who else had their accounts frozen lately? But anyways, I just read some story of, this is not Iran war. No, I think it was Iran. Yeah, people in Iran, the women who don't wear the hijab, gets their account frozen. So, but anyways, that's my take on it. What are your thoughts on that, Brian?
Yeah, it's interesting what you said about Fidelity. One interesting black swan that could happen to Fidelity, and I've kind of wondered about this, is that they still have to hold the crypto, right? Like you buy Bitcoin on Fidelity.
Yeah.
They still are holding it, and somebody could hack, or Fidelity could lose the keys or whatever. I mean, crypto is more hackable than stocks, and so it is possible that one of these huge institutions like BlackRock or Fidelity could get entangled in some sort of crypto tech glitch, or that could happen, and people need to be aware of that. I don't know what the chances of it happening are, but yeah, it's funny how idealistic the Bitcoin maxis are. The idealism is not so great for people trying to get financially free, because yes, I do believe in Bitcoin. Yes, I do hold a lot myself. But, the idea that self-custody is perfect and you're never going to run into issues with your hardware wallet being hacked. You guys, I did an in-depth video on hardware wallets, and they're not perfectly safe. In fact, Ledger and Trezor has a whole security protocol. Those are the manufacturers of hardware wallets, by the way, and no, I'm not sponsored by them. they have a whole security protocol where you can check their website to see if they have plausible deniability and they're being held at gunpoint, and some terrorist is telling them to ship out contaminated or hacked hardware wallets to customers that have, something like that can happen. It's not a guarantee that you're just never going to have a hacked hardware wallet. But I did want to bring conversation back just for 1 minute to making money, how to make money in a bear market, because that's what's on my mind. That's probably what's on a lot of people's minds. One of the reasons that I think Bitcoin and Ethereum have such a bullish case coming up in the next bull run, obviously, they're gonna run first. The large caps run first. Bitcoin dominance leads back in a new bull run. But one thing I think is very interesting that I don't think very many people are talking about at all is that now that crypto trading is opened up on Fidelity, it gives access to trillions of dollars of investor money, whether it's 401ks or really, really rich boomers like my dad, who would never. I tried to help my dad sign up for Coinbase, and he didn't get it. He didn't want to do it. But my dad called me a couple days ago. He's like, "Oh yeah, I bought $500 of Bitcoin on my Fidelity account. It was easy. It was just like buying a stock." So I think that when Bitcoin starts to bounce, whether that's macro bottom in 2 months or 2 years, I don't know. And you start seeing it on the news again, and people are saying, "Oh, Bitcoin might be back. Oh, the next halving event is here." I think there's a very good chance that some of these boomers are going to pile in, and this time they're not going to be, looking down their nose through their spectacles trying to type in some password on some random app. They already have Fidelity on their account. I mean, I'm friends with all these really rich old Jewish guys, and they all use Fidelity, and they all have millions and millions of dollars. And so I do think that the new bull run will come out of the gates pretty strong if there's a lot of, access to crypto. There just hasn't been access before. Grayscale no longer has a lot of trust with their huge discount value right now. I mean, that's just a joke. And they're not even backed 1-to-1 with Bitcoin. So I do think that there's going to be a lot of new money that has access that has not had it before and has not had an easy way to buy, especially since there has not been a real ETF approved yet.
Okay, so that's I mean, I think at the very start of this bear market, somewhere like February or March or January, way back, we had this conversation, and we're saying what to buy in the bear market in terms of crypto, and I think both of us pretty much just settled on Bitcoin and Ethereum just as the safest bet for ourselves, not financial advice for anybody else, is basically those two big coins. And now this whole Fidelity thing helps with that narrative because all these boomers, as you say, with literally added up like trillions of dollars, they're not going to tinker around and try to learn a new skill of Trezor wallet or whatever wallet, which could still get hacked, right? Like, and or then you go, oh, what if I forgot my password or whatever, right? Whereas they know that they're thinking like me. They're thinking, if I put it with Fidelity, first of all, they don't believe in not your keys, not your coin, because they're the guys with the power. Why would the government be after them? They're not trying to overthrow the government. They're not trying to start an uprising or start, some sort of controversial blog or anything about how the U.S. dollar is going down. They're part of the system. They're the winners from the system. They're not worried about being chased or persecuted by the government. Second of all, they know what I know, which is Fidelity could essentially never go down. As in, if it was going to go down, they would be bought out. They would be, the U.S. government would print money to make sure they're made whole. They would make sure that the 401k accounts do not get burned. So they would probably trust that more. And my dad's in his 70s, and he even said, oh, look, I want to throw some money in Bitcoin. And I try to explain to him hardware wallet and all that, and he says, oh, okay, maybe not. He says, that sounds like a lot to learn. And it is for folks in their 70s. And this is a guy who still works, who still, does real estate deals. I guess, Bitcoin and Ethereum, I've been telling folks, Bitcoin at 15K, 16K, that's good enough to dollar cost average in. For Ethereum, probably my thinking is it might have a retest of the below 1,000. The 880, 900 area is still quite a possibility. what I've been showing in my Discord is that, I mean, if we look at the Ethereum chart, right, and, one massive the pennant, it's a bear pennant. If you look at what happened like Feb, since the June crash when Ethereum went to like 30, went to 880, it's essentially, since then it's basically been going up and down, sideways. And if you draw two lines, the support and the resistance trend line, it's essentially, it's basically a large triangle or a large pennant. Usually it's a continuation pattern, so I'm sort of expecting it to break down on the downside. When it does, there's a very good chance to retest 880 again or go even lower. So, for Ethereum to accumulate, I'd say probably wait for it to get below 1,000 again. Bitcoin at 15, 16K. I'm long-term bullish on Bitcoin. It's okay to dollar cost average in. It's just we don't know how long the bear market is going to last. We don't know how much further it will go down. So, one, I wouldn't be going all in right now. And two, let's say it's difficult to know what portion of your funds. Let's say if you wanted to buy, say, $10,000 or $100,000. Let's say if you want to buy $100,000 of Bitcoin, and you say, I'm going to break it into 5 portions of $20,000 each. Will it have 5 more small movements down? Can it go down another 5,000, and you buy 1/5 each time it moves down 1,000 from, say, 15, 14, 13, 12, 11, 10? Or does it go, where do you say, I'm going to break it into 10 portions, so I'm going to buy $10,000 every time it drops another 1,000, so it'll go can go down all the way down to 5,000. It's theoretically possible. That's the only difficult part to know. And also, for a lot of the folks out there, I think the problem is that for a lot of you guys, unemployment might actually be a real issue, because I personally think the recession is coming, and it is going to get a lot worse. It's likely to be a bad recession. I don't know about comparing to 2008 and all that. And I mean, but I think it's not your average recession. So for a lot of folks, it's basically, for a lot of folks, the question is, can you, you might think, oh, I've got 100,000 to invest, but when it comes down, when the day comes, you might actually find that you might only have $40,000 to invest, because you're going to lose your job, and $60,000 is going to be spent on just, on your mortgage, on your food, and different sorts of expenses. I see the unemployment rate going up a lot more in US, Europe, UK. I know go up more in Australia as well. At least for about 6-month period, people are going to be worried about jobs and stuff. I do think that is coming, but I guess Brian probably disagrees with me on that front.
No, I mean, I completely agree. And what a lot of people don't realize about inflation is, even if inflation starts to go down, the higher prices that we have now are here to stay. Some volatile prices might go down a little bit, like gas might come back down, shelter might, but a lot of the prices that we have now, they're not going away. Just because the recession ends in a year or two, all of the new prices that we see on food and everything, it's going to stay up forever and only go up. Again, it might only go up to 2%, which is what Jerome Powell is hoping for, but it's still a lot higher. It's really tough times for people in the United States. I mean, it's really expensive to live and just survive. And that's also a reason why it's going to be hard to have crypto pump back into a very strong bull market, because there's just no money out there. You and I were talking about this a couple weeks ago, Pablo. There's just no liquidity in the market. There's no dollars in the market right now. People are spending their money on food and shelter and housing, and so it's going to be hard to have a massive bull run. That's why I point people back to, I really want to make this point, the micro narratives in crypto. I do think that if you are willing to put the time in and do the research and stay engaged in the bear market and follow the narratives, you can still make a lot of money in crypto, because these little micro narratives, like the World Cup soccer that Pablo discovered, way before anyone else. Pablo was texting me when some of these cryptos that like the Spanish soccer team were had the market cap of like 2 million. He was like, "Are you seeing this? What's wrong with this? Why is this only 2 million?" And sure enough, like, yeah, he was right. And a few weeks later, it was like 10 million or something. But that's the way right now, is to do micro narratives, and not only micro narratives in crypto, but micro narratives in your own life. Take over your dad's tire shop to survive the recession. I mean, there's all kinds of opportunities to survive and thrive and make money, but it may not be the macro that gets you through. It's such an important distinction, you guys, because in the bull run, the last 10 years of the Fed money printer, it was a macro bull run on real estate, on stocks, on crypto, and everything was just going up, and you really couldn't lose. And I think that the sad thing to me about what happened with the whole crypto collapse is that a lot of younger people were relying on crypto as sort of their exit ticket from the unfairness of the economy now. And I don't blame them at all, because it is definitely unfair. The cost of a house compared to annual income is the highest that it's been, just in general. I'm not saying today, I'm not pointing out an exact statistic, but over the last 20 years, the cost of buying a house relative to your income is way, way higher. So it's easy for our grandpa to say, "Oh, you're just lazy, son. You need to work harder," when grandpa bought a house for $6,000, and so, yeah, it is hard times, and it's not easy to survive and to have money to invest. And that's why my advice, not financial advice, but my general life advice, is to look for micro narratives in crypto and look for micro narratives in your own life, meaning unique opportunities that you have under your nose that someone else might not have, to make money, to survive, to just get through. And as Pablo said, to stash some cash away for opportunities. We also can't predict which opportunities are going to come up and when they're going to come up. Kind of have to just be ready to pounce on them, and nobody knows which ones they're going to be and when they're coming.
Okay, so I guess yeah, like so Brian and I are kind of in agreement on that part as well, which is times will probably get hard, and the trick is, I think, and I've said this a lot in my Discord as well. The trick is basically find the cash, in the coming recession or bear market, and basically get ready to buy when everybody's afraid. I don't think we're quite there yet. If this was a horror movie, I would say we're kind of at the midpoint of the film, and then just when you think there are no more body counts, it's like a slasher movie. You find more bodies stuffed in the fridge. You find more bodies in the basement. You find the killer comes back from the dead. I'm gonna do a separate video on this to explain why I think this recession is going to be particularly bad. The data is coming in. I've been calling it from a long time ago, as people who've been following me knows this, and the data so far is backing up what I'm saying. Like, I'd be happy to admit I was wrong and say, okay, 6 months ago I didn't have the data. Now it looks like the recession's not going to happen. It's not going to be bad. Fed's going to pivot pretty soon and get ready to buy in about 2 weeks, which is not the case in my opinion. Now, I want to ask you, Brian. You've done well as well. It's not just the soccer coins. Brian has picked a few really good bottoms in the last 3 or 4 months. And, one of them in crypto, one of them in stocks ETF that I'm aware of. So what tipped you off about the altcoins that you bought and the stock ETFs that you bought to make you think that was an opportunity? I already know which ones, but I'd rather just put the question to Brian and ask him how did he pick them?
Yeah, so the ETF that I made a video about, I don't want to say I recommended it because it's not financial advice. A couple of months ago, the video went viral, had like 1 million views. It was just a British ETF that allowed Americans to buy into the British. It's kind of like their version of the S&P 500. And there were two things going on that made it very attractive. Number one was the strength of the dollar was just through the roof, and we all know that that's not sustainable. It's not going to stay up there forever. And also the British economy itself was in the toilet. So those two factors were kind of a 1-2 punch for it being a really good investment idea to me. We could buy British assets cheaper because of the strong dollar and because they were on sale anyway. So that worked out really well. When it comes to altcoins in crypto, I think that it's sort of that analogy. When the tide goes out, you can see who's swimming naked. I've heard that a few times on Twitter. That's not really mine. I don't take credit for that analogy, but I really like that analogy. When the tide goes out, you can see who's swimming naked. And
Buffett
now
said
that the bear market is here, you can see who is still building and what narratives are still surviving. And we just don't need 20 or 50 or 75 layer one cryptos anymore. So I think just staying really plugged into what's coming, trending narratives. There's one crypto project that I don't want to name yet because I don't know enough about it, but I'm researching it, and it has just an all-star team, and there's a lot of big names in mainstream industries, and they've come up with a new cryptographic technology that looks really disruptive. And I really like it. Again, I'm not even going to name it here because I don't want people to think that I'm trying to pump it or something, but I'll talk about it when I'm ready. But, just looking for stuff like that. And you guys all know how it works. In the beginning of the bull run last time, it was like this whole play to earn thing came out. And here's the key, guys. It didn't even matter if the play to earn games were any good. The only thing that mattered was being early to the trend, right? And getting on the trend before
absolutely
it really took off.
Absolutely. That's an important part. The coin that I thought you were going to talk about is I'm aware that Brian texted me, privately, and he says he bought Matic at 0.48, and that's turning out to be very good 100% gain. And it went to 130% gain in the bear market, and if it goes down, I think that's possibly one that I may hodl, or Brian may hodl. It's not financial advice for anybody else. Like the soccer coins, obviously you couldn't hodl. You just had to trade in and out. But Matic is possibly one of those. And, it's 0.48 or 0.3 where it went to could possibly be the bottom for Matic. Although I think there's a decent chance it could get tested again if we get a real recession. But so what was your thinking behind that, Brian, on Matic?
Yeah, I think that if I had to pick one crypto right now that could lead to life-changing money in the coming 5 years, it would be Matic for sure. And I'm not the only one saying this. This isn't some kind of breakthrough. You guys probably already know this. But one thing I really like about Matic is they're extremely flexible in what they're building right now. They're not stuck to one tiny narrative. I mean, they're doing everything. They're a layer one. They're a layer two scaling solution for Ethereum. Everybody is building on them and using them for NFTs. I just saw yesterday that Warner Music Group announced that they were releasing NFTs on Matic. They have a massive amount of adoption, and it's that network effect where it's synergistic. The more adoption they get, the more deals they get now, then the more money that comes in, they can keep their staff going during the bear market and building. And when Luna collapsed, and that whole disaster happened, and $10 billion just evaporated, like 95 projects that were building on Luna moved over to Polygon and came over. So you really have to think of it as this network effect. Just like now, there's not 100 different cell phone companies anymore, right? There used to be in the 90s. I'm pretty old. I remember when cell phones came out. There was Nokia. Apple was nothing. Nobody wanted an Apple phone. But now there's basically, Apple, Samsung, and like 3 other big ones, and that's it. And everybody else is gone. And I think that's the way it's going to be crypto. And I definitely think that Matic I'm very comfortable hodling Matic, because let me tell you, if Matic disappears, then I think crypto's dead. I don't really think that, but that's kind of how I feel about Matic. And it's kind of obvious, and it's sleeping right now. Nobody's really, the market cap's still very low, I think, compared to what it's really worth. And it might not be 100x or 1,000x, but I mean, what would you rather have? 100x that's gambling, that you might lose your money, and so you only feel comfortable putting $40 in, and you really make nothing. You don't make life-changing money because you may lose it, or something like Matic, where I personally, not financial advice, feel more comfortable putting a little bit of a bigger chunk in, because that's one of those bets where if it doesn't work out, it's like, who's going to come along and beat Matic? And it's someone will, from left field, but I still think Matic will be one of those big winners. It may not be the Apple iPhone, but I think it'll be like the Samsung or the whatever the smaller phones are. At least that's my thoughts on it.
Yeah. So basically, Matic is definitely one of the names I'm looking at. You know, I haven't started a segment talking about altcoins yet because I personally think it's a little bit early. Altcoins are basically the most risk-on assets you could find. Like they're they're right out there on the risk-on curve. Cash is the most risk-off thing you could have. So basically, I don't think the environment we're in right now is conducive to risk-on just yet. But you know, when it crashed to like 0.3, 0.4, Brian grabbed it. That was a smart move. And even if it goes lower than that again, Brian has just outlined why he thinks it's okay to hodl something like that. Now, what I've noticed is that again, you know, neither of us sponsored by Matic. Again, basically, what I've noticed, just you know, in the bear market, you are seeing who is building, who's actually not, who's actually letting stuff go, and one of the stocks that I've been talking about that I bought into dollar cost average into is called Nubank, and that the reason why is because it's actually really into financial tech, and it's a small Brazilian bank that's basically using phone apps to help the unbanked people of Brazil, of South America and Central America to get banking done. It's grown exponentially, and Warren Buffett actually invests in it, has been buying it for a couple of years. He bought it at $9. I got the chance to get in at $7, and I thought that was a bargain. And then it went to like $3 or $4, so I went in like a lot more heavily. And I thought, hey, because it was only a small investment at the previously. So when it crashed down, I was like, wow, this is like 3x cheaper than when Warren Buffett got in. So I went in heavily into it, and I spoke about it in my Discord. And Nubank is now big on crypto, and they're building, their crypto app on Matic as well. They released that news about a month ago. I was like, oh wow. So you can see all the movers and shakers, all the the really the financial companies with really big potential. They are picking Matic. Like Instagram, I think a month ago said they're going to build a system where you could display your NFTs, where you could trade your NFTs across the Instagram system, and they're going to use Matic as well. So, and that's when the price of Matic popped. There are all these news coming in. As I say, if I didn't have a big following, I would just tell everybody, Matic's going to zero. That's all, dump it. And I wish you guys would dump it back to 0.48 again, or even lower, so I could load up on it all over again. Even lower, the lower the better. So now, on top of that, what other? I think it is important. I think Bitcoin and ETH are are the safer options, obviously, because of not just because of where they are, but also because of fidelity. But however, sometimes I like to place like just a small bit on a dark horse, on a small unknown coin, not like Matic, but a smaller unknown coin, like the one you're researching right now, Brian. We've spoken about it, and not a lot, but even just a small bet on it. If it could, some of these coins can go like 300x, and that can be life changing for some folks. The key is not to go too heavy on some of these.